Good morning.
Thanks for coming in today.
I'm delighted to be here. Congratulations on your 3rd year anniversary.
Thank you very much. I must say I appreciate you coming, because a lot of people have told me outside there that, Nancy, you interview a lot of men. You talk to a lot of men every day. Breaking the chains. And today, it's really wonderful having you here in the studio. Having said that, it's a Monday. We're talking serious business alongside our celebration. You became the DG of Securities and Exchange Commission in the month of January, precisely on the 7th?
Absolutely.
Of January 2010.
You did follow everything I can see.
So I think let's start with the number of reforms, so to speak, that the Securities and Exchange Commission has come up with since you assumed leadership in January 2010. Because prior to your leadership, a lot has been said about the Securities and Exchange Commission just being a toothless dog, so to speak. Because I'm in the marketplace, I hear about Securities and Exchange Commission and all of that. But when you came in, it seems to turn around. Tell us, what was the magic wand?
Thank you. I think the starting point has to be what the context has been for our capital markets over the last 2 years. As you know, in March 2008, our capital markets peaked in terms of the market capitalization of our equities. It was about 13 trillion naira. 18 months later, it had bottomed. In a sense, the bubble had burst to levels of about 5.5 trillion naira. Secondly, over the last few years, you've seen a number of retail investors, the ordinary citizens of our country, coming to the market. Many of them coming at the peak of the market, which meant that when the bubble burst, they basically lost a lot of value. I've heard stories around people who sold their homes to come into the market, people who put their gratuities after they worked for 30 years into the market, and essentially they've lost value. What for me, my mandate, therefore, is first to refocus on the mandate of the Commission, which is to protect the ordinary investor. Secondly, to build a world-class market. And therefore, the elements of our reforms are really based on building a world-class market and protecting the ordinary investor. The elements include, first, restoring market integrity. And restoring market integrity means that first, we must be a truthful bulldog. Since you said we're a toothless bulldog, basically we must enforce our rules. We must make sure that we have zero tolerance for improper behavior, and we must make sure that anybody operating in this market has to abide by the rules. Secondly, and also important, we must deepen and broaden our capital markets. We've had a market that was predominantly equities driven. We've indeed had a market that was actually banking stocks driven. Even as of today, the focus is primarily on banking stocks. We have at its peak, the banking stocks making up 70% of the stock market. Some of what we're doing is looking at how we can have companies, other companies, list on the stock market. In fact, there's an initiative that the President Jonathan Goodluck himself has been leading, which is to encourage bringing upstream oil and gas companies and telecommunications companies to the market so that Nigerians can participate in the success of some of these companies. We're also looking at introducing other products, exchange-traded funds, Islamic funds, given the populace of our country. We're looking at developing a vibrant bond market. The sovereign bond market, the federal government bond market has done extremely well over the last few years. What His Excellency President Goodluck Jonathan did in March was to approve tax waivers for state government bonds and corporate bonds, which meant that issuers, state governments or corporate bond issuers, could actually issue bonds at levels that are 300 basis points lower than the levels that they used to issue. There are a number of other products. We're encouraging the other citizens of Nigeria to consider collective investment schemes, and that's why I mentioned exchange-traded funds, Islamic funds, and other funds, and we're trying to strengthen the framework for collective investment schemes. We're also very keen to focus on an issue that we feel was one of the reasons why we faced the challenges that we faced in our markets in the last 2 years. Capacity for ourselves, capacity for other regulators, capacity for market operators, capacity for investors. So investor education, public enlightenment, so the shareholders understand their rights, such that investors understand the product they're investing in, so that operators understand what is appropriate behavior, what is inappropriate behavior for ourselves, because we need to keep in touch with what's happening in the market, and we need to make sure that our enforcement has results such that there is no people understand that it is not profitable to do wrong things in this market, so that people really see that we have a zero tolerance for things that are improper. Corporate governance issues, we're trying to build a world-class market. So we must make sure that we abide by best practice. So we're very keen to accelerate the work with respect to introducing international financial reporting standards, so that whether it be an international investor or a local investor, they can consider this market as the first port of call. I was surprised reading research by Renaissance a few days ago, which showed that as of the end of last year, 53% of the investors investing in our markets are actually international investors, while 47% is local investors. So we must make sure that our market is the best market that any investor, whether it be local or international, seeks to consider. Those are the elements of our reform agenda at the SEC.
Okay, I think at this point in time I should try and bring in this. It seems that